Hello, everybody. Today, I want to discuss what the main investors have said in the last few days and to give you a market outlook from northern Italy, where I'm from, that is hardly hit by the coronavirus. Here in northern Italy, we are probably reaching the peak, but it's also a must to say that there's a big controversy around the contagion tracking method. An open letter was signed by 80 mayors in the Milan area complaining because the people that have been in close contact to infected people, unless they don't show clear symptoms as well, don't get tested and can still go out to the supermarket, drugstore, etc. So my fear is that the situation will continue for a long time. Tudor Jones came out on CNBC and said that by mid-April he expects to reach the bottom by the time the US reaches its contagion peak. After that, he said the market should rally to even higher than current valuations. But this depends on the ability to get back to work as soon as possible. My view is that it's quite hard to see the peak by mid-April in the US, given the current situation, that people will be able to go back to work that soon. Cooperman came out on CNBC as well. He said that this time is different because there's a financial crisis, an oil shock, and a pandemic at the same time. He thinks the bottom is about to arrive in the near future, but he also underlined that he doesn't have any medical expertise, so he doesn't have a clear picture. If the crisis continued beyond April, he said, he would become extremely bearish. He later said that he is surprised by the way people react to coronavirus and compared it to the flu deaths that happened in the past years. Since I live near Milan, Italy, and I'm currently under lockdown, I have to tell you that at the start we followed the same rhetoric, but later it was clear that it's much worse than the regular flu because even though mortality is relatively low, a high number of people need to get recovered and hospitals run out of space. So you have to take a tougher containment measure. And this will have a very bad effect on consumers and the real economy. Bill Ackman said that, quote, hell is coming, and he has a feeling that he never felt before, not even in 2008. He made a big trade. He bought credit default swaps in January and February and made billions. According to the main news reports, he made more than $2 billion with this trade. And in the last days, he has been busy closing this position. He made this deal because on the other side, he is long on Lowe's, Hilton, Allegiant Air, and Berkshire Hathaway that have been hardly hit by the contagion. He commented on Bloomberg that the federal government needs to step up and lock everything down because not all states have put restrictions yet. Morgan Stanley's Mike Wilson was interviewed by CNBC as well, and he said that the risk reward right now is quite good in the equity and credit market, and they're buying back. Deutsche Bank had a similar perspective, declaring Apple a buy because they think the slump in the sales is already priced in. It's also good to remember that Apple donated 10 million masks in the US. Mark Cuban came out on CNBC again, saying that people need something to cheer for, and he opened to playing basketball games with closed doors. Personally, I'd love to see that, but given what has happened in the last weeks in Italy, it will be very hard because even players started to get infected. Mohamed ElErian came out again as well, and he stated that the road ahead of us is really, really hard, and there will be enormous layoffs, bankruptcies, and later said that the stimulus won't have an immediate effect. UBS CEO Sergio Motti came out on Bloomberg saying that the banks should and will be a part of the solution by transmitting the liquidity central banks want to give out, even if they won't make a profit out of it. This week was also announced the first quarter of GDP in Singapore, which fell more than 10%. And the Singapore bank pushed hedge funds to deleverage soon. Anthony Scaramucci came out on Yahoo Finance and underlined there's a buying opportunity in the bond market because even US government-backed bonds are at a 30% discount in the market. Howard Marks came out on Yahoo as well, and he said that he was shattered by the fact that still too many people are socializing outside. He said he likes the current prices, but he's ready to see a further drop in the market. But he made very clear that nobody knows what is going to happen. If you're interested in the books written by Howard Marks, I'll leave them in the description. This is it for today. Thanks for watching. Make sure to subscribe to the channel if you haven't done it yet and like the video because it's very important since we just started out. If you want to support us, you can do it either through PayPal or by doing your regular shopping on Amazon after clicking one of the links down below. I wish you all a good day and see you the next time.